The Nasdaq has been leading higher, and finally the S&P has been pulled out of the mud here. And the good news is that we're seeing increased volume on the move to the upside. So the volume is confirming the price action to the upside on the SPX. I just want to check a few things on the minis. Are all good to go. That's all good. I did want to have a look at the S&P. This is the S&P low volatilities, the Johnson & Johnsons of the world, and this is the all-time high here for this, and we've got this as an ABC correction here. We can also have this as an A and a B and a C correction over here as well with 1 and 2. So that should start to lift off now. So those stocks like Johnson & Johnson can lift off. There can also be another little tiny low, so just be mindful of that with those particular stocks. The Nasdaq stocks are obviously been cruising higher for some time. I mean, this particular pattern, all of this here, it can be viewed as bullish as well as an ABC here, and then wave 1 here and 2 here, and then going up for a big third wave up here. The thing I don't like about that is that this is quite big for a wave 2. So yeah, we'll still play, we're still looking at both bullish and bearish scenarios within the market, and I think that's sensible. And we'll be able to pick our times on different times to do different things. Just want to have a look at the VIX here for a moment. I don't normally look at this, it doesn't really mean that much to me, but always good to just get an idea of where things are. So let's just get an idea of where things are. So can we look at that as that? That would be 1, 2, 1, 2, 1, 2, 3, 4, 5. So we could probably put that here. Oh, whoops, daisy. Okay, I'm still, yeah, no, let's rinse and repeat that. Let me just double check that again in here. Let's just 1, 2, 3, 4, 5, 3, 4, 5. Okay, that's looking good. Where are we? We don't want that. We want that. We need to drop that down to there, and then we just need to check this one. This one here is just 1, 2, 3, 4, 5 here, so that's cool. So this will be also be 1, 2, probably there and there. So that will be down here. So we can probably expect the VIX to continue down in much the same sort of light as the other things, but I'm not that familiar with this particular thing. I don't really use it too much, but that's that. So let's just go in and look at things. So we've got, this is the S&P 500 here. We've got bullish counts and bearish counts. Now the bearish counts from the top up here, which I don't think I've got labeled, but we'll just bring it in anyway. So from the top on this particular chart, we've got this top and this low. That's pretty undisputable. I mean, because you chuck a couple of Elliott people in the room, and we've all got different opinions, which is good. It's just good, bad, and ugly. But it brings in us to that 4,300 here. That's the 50%. Well, let's just shape this up a little bit then. That's the 50% there, and the 61.8% at the 4.3. So it's hit here before, and it's hit here and here, and based on this particular wave structure, we should be going up there and testing it again. So this would be the bearish count with the A wave here, then an A, B, C for the B wave here, and then 1 and 2 and 3 and 4, and then 5 waves up here for this. So that's what we've been looking at, and that's where we are. And is this true? Is it a top of a corrective pattern? Well, the only thing that I can see that's keeping us bearish is BAC, the bank, but I can see a way it can wingle its way out of that, but certainly not the regional banking sector, the KRE. That's definitely in bearish patterns. The other one is the Russell, has got a confirmed bearish pattern. So there is you know, there is space for this to move here and then to move, you know, and move down to 3,000 thereabouts, whatever, yada yada yada. So that it's possible. Now, if we move up here in 5 waves, if we're going to be bullish, well, after 5 waves, we're going to have some type of corrective pattern. And if we can identify it as a corrective pattern, well, then we can, you know, we can continue our journey to the upside. We can take it to the next level, to the upside. So it's just step by step, really. That's all. And at the meantime, we've got wave 1 here and 2 here, and we want to go up for 3, 4, and 5 into this. That's what we've got at the moment. The Nasdaq has been leading higher, and well, we know that, you know, folks, you know, were in yield, and then they're starting to move over to equity, and we can see that, you know, good high quality, you know, equity stocks, tech stocks, or there's some other ones as well, you know, old Berkshire Hathaway, we see volume moving into that quite some time ago. So we notice all that, but, you know, the time that we get to here, they're probably all in there at that point, you know. So, you know, yeah, so anyway, the normal story. So anyway, that's where we are here. The bullish count is a bit more, well, obviously more bullish. So let's just go to the 20K here for a moment. So the bullish count here is that we've got 1 here and 2 here. Oh, sorry, 1 here, an A and a B and a C for 2 here. You could probably put this as 1 and 2 here, but yeah, I don't need to go there just yet on that. We can do that much later in the trend up here if it's going to be the case. And in this case here, we could actually look at it in terms of 1 and 2 here. Now, this might sound a little bit silly, but when we have a look at some stocks like Google that we're trading in here, I might need to go to a bigger picture. Yeah, just use this as an example. Okay, so we want to go back to 200 here, and then we want to have a look at the bearish count and the bullish count. So the bearish count will be here on 50K ticks. So the bearish count here is a little bit messy in here, but let's go through it, because these are the sort of stocks that will, you know, this has got the same pattern down here as the S&P 500. Do you know what I mean? So we can look at it as an A, B, C here for an A wave or a W, and then an X or a B here. And then if it was a W and an X, then we'll have an A and a B and a C wave here. So we'll come up here for 1, 2, 3, 4, 5 and finish at that point. If it's going to be an A, B, C for the A wave and then a B wave here, then we're going to have 5 waves up for the C wave here. So this would be 1 and 2 here. Now, this is what I wanted to talk about here, because let me just clean some of this up here a little bit, because this 1 and 2 here, this is really where, if I just, if this is going to be, sorry, damn housework, 1 and 2, then we can look at this as wave 3 being here where that C wave is, and then a 4 over here, then 5 up here for this, if that's going to be the case. So it could end here, which I doubt it. I think more inclined of actually having this as 1 and 2. Now, what I wanted to say here is that with the S&P 500, we're looking at this as wave 1 for the S&P on the bullish count, and wave 2 here. Now the S&P is just in here at the moment, right? We've got wave 1 and 2 for the S&P, and it's just pushing up here. So it's actually lagging Google here, the big tech stocks, you know. So, but that would be the count. So looking at all of this as 1, 2, 3, 4, 5, and 1 and 2 here, and pushing up for 3 here. So when you understand that, you can see that all of this here being wave 1 here and 2 here. And then we can look at this here being wave 1 and 2 in here. We've been in here for quite some time with all of this, and it's just been, you know, we could see the volume churning over between the bulls and the bears, and, you know, we could see that the wave count, we figured that that the bulls would come out on top of this simply because of where the Nasdaq is and all those sort of things. So, and that's finally sort of happening. But yeah, this is on 20,000 ticks, and this is on 50,000 ticks here, but that's why it looks a bit more like a daily chart here. But all this up here for 1 and 2, and 1 and 2 here is the same as this, as 1 and 2 and 1 and 2. Is that going to be true? I don't know, but I still know this is going to go up higher here. I know that much. So yeah, so that's the bullish count basically. I mean, the bullish count for Google here. If I go to the 20K here for a moment, just to finish that off, and we can make it look like this here. So 1 and 2 and 1 and 2 here, and then 1, 2. So it's really just, it's doing all the right things, you know. I mean, because when I originally had this as 1 and 2 and 1 and 2 here, I thought, oh shit, that doesn't look very good, you know. But it's building quite, you know, it's been building quite nicely with all of this, and in a way it's sort of catching up, you know. I mean, it's 50% retracement level. It's up around the 130 area here, so it's going to stall there, but that would be in line with all the 4s and 5s up here in that case, you know. So anyway, that's sort of one of the places the money is flowing. So we need to see the banks turn bullish here and a few other things, and we talked about bullish counts on the banks, on Goldman's and Morgan's today in that video, so you can check on that. But yeah, this is where we are here at the moment. So let's go to the intraday and check on this further. So this is on 5,000 ticks here, and in this case here, I've got this in two ways. I've got it as wave 1 here and also wave 3 here in 2 different counts. So I know that's a little bit confusing, and I always got different counts going, and because at the end of the day, you know, I'm just looking for trade setups. That's my thing, you know, and yeah, so you know, buying new highs here we've talked about, and being, you know, we're long in lots of stocks at the moment, and so on. So yeah, but all I want to do here is just go step by step. I always look at the most minimal count possible to start with. We've got wave 1 and 2 here, and then we're going to have 3 and 4 here, and then up for 5 here. Now that we know that's the 61.8%. So once we get to that point, once we get to this level here, then the 4-3, then we know that that's, you know, that's a problem area at that point. So yeah, that's where we're at the moment. So in terms of the trading levels, 4,000 is a medium level, and then we've got 100, 200 and 300, which is all part of group 1. If we get a tested support on top of this level, a classic trading levels pattern on top of that level, a pattern like this, and it can get a variation of that with this, and there's a final pattern like this here. It's only, I nutted it down to 3 patterns, of course, but if we get a tested support on this level, which takes a while, then we know that the market is going to be severed, detached from this particular number. This number won't have a pull. Now, it looks like a long way away from here, but on a daily chart, it's not that far. So I know that if we get tested support here, then we're not going to be pulled back by this number. We'll be after 1, 2, 3, the next number in the Fibonacci sequence is 5 and then 8. So we'll be pulled up. If we get a tested support here, we'll be pulled up to 5 at that point. So that's when we get here. I won't know, even when we get here, I won't know for a little while, for sure, you know, which direction we're going to be going. There's good cases around for both of them, you know. I don't think you need to choose the side, you know. You don't need to, because, you know, just wait for the evidence, really. Make a decision then, you know. Right and wrong's the same thing, isn't it? Just creates emotional trash. I mean, emotions are good, don't get me wrong. We're here to experience things. So yeah, so we've got 1 and 2 here, and we've got, so basically, you see this top here at between 100 and 200 here, we've got the Fibonacci's running again, like 1, 2 and 3, and then 5 and then 8 here, and we could put in group 2 with 8 here as well. Now when you get to tops like this, you're going to see the market fluff around a little bit and test it. It's going to become the support in due course, and that's what it's doing now. And 5 is the second strongest number in the market. It's at 50, 154, 150 there. So it's important. We can see that it's important because it's kept all those tops in place here. But now it's becoming the support in that case. So the next number up is group 2 here. So we can just put that in here while we're here. Why not? So, because it's important, because that's 8. 8's a profit-taking number. And then group 2 is 65. So this is important for day traders, and 72 in here. So you can see already that, oh, hit the wrong button. This should be 72 here. It could be 70, 22 and a half. To the magic prime number 73, but that's that. Splash of color just for design purposes too. So we can see that after 5, the next level is 165. Once you get support in 165, then you're leaving the 150 at that point. So yeah, anyway, this is continuing to the upside. There's no need to exit any trades at this point with all of this. And we can just start to fill in the dots as we go here. So this will be 5. So nothing to do here. I mean, the main question you'll have to ask yourself is, do you get out at 4-2? Because when you're at 4-2 here, what will happen is that we'll end up having group 1 here of 4-2. So that's 4-2 is a minor level, and these are sub levels, of course. So 1, 2, and 3, 10, 20, and 30, and then 50, and then 80. They're all the sub levels. Now the thing is that if you want to, because you need some intestinal fortitude to stay in a trend. But this here, this area here, will be the swing range for this number. Until that becomes a tested support at number 3 here, then even though the price is up here, then it'll still belong to this number here. And this will become the support. This wave 4 here, and the top here, this top here, when it comes in here, all of this will create a top here, and it will become the support for these guys over here. But if you want to get to 4-3, you have to give this enough room at this number to swing here. And all you got to think about is you could take some money off the top, but don't take all of it, and then add it back over here somewhere at, you know, the 41.80 or 41.90 or something. It doesn't have to be perfect. It just needs to be rough and ready, so to speak. So that's where we are at the moment with this. We'll have a look at this count more detailed on the NASDAQ here. So with the NASDAQ, we're also looking at it as wave 3 here and 4 here, and we'll be going up for wave 5 here. So in this case, this is where the top can be here for this. Don't worry about the price point over here that I'm pointing to, just the numbers, because we need to adjust these up and down and all those sort of things. We can do projections, but it's much safer and easier to, more accurate to count the waves. So we've got wave 3 with an ABC for wave 4. And as you know, we've been counting up here as 1 and 2 and 3, 4, 5 for 1 and 2, and then back for 2 here. Then 1, 2, 3, 4, 1, 2, 3, 4, 5 for 1 and 2, and 1, 2, 3, 4, 5 for 1 and 2. And now we're heading off into the third wave here for all of that. So that's all good. That will push higher. It may come back and test the 5 here as well on that. But when you think about it, where we are within the structure here, we're in, you know, what Elliott traders look for is the third of the third. So we're in the blue wave 2 here, which is the third wave now, and then we're in this next one here, or in this third wave, or in this. So actually we're in the third of the third of the third here, and we could end up having the third again as 1, 2, 3, 4, 5. We could end up pushing up here and then coming back in 3 waves here to check on this, and then push up again in another wave 3, 1 of 2 here, the fractal situation like this. It may pull back, it may not. I haven't really gone in there and really pulled it apart, but I'm just saying, you know, either way, the main point here is the next number is 8 here, and when we talk about 8, we talk about group 2, so we need to put that in as well. So we can go to, it's a little bit complicated when you get to large numbers, but it'll be that 65 number there, 13,650, and 13,720, the 72 number there. But 722 is fine as well, because really what it is halfway between this level and this level. So it's actually 22 and a half. So that's why it brings it quite close to that amazing prime number 73. So, well, I don't know about that, but it sounded good. So yeah, so we are in, when you look at the beginning of the trend here, wave 4 to wave 1 here, this would be, this right in the middle here, that's that would be pretty much the middle of the trend, in case I've got the little 1 and 2 in here. It doesn't, I think that might be the case, or 1 and 2 in here. So when you go from here to all the way up here to wherever that 4 and 5 is up here, this is the middle of it. So you could pretty much grab all of this here, if you can use your imagination for a moment, and flip it over flip it over the page and put it up here. Not drag the whole thing up, but flip it upside down, and then you've got the rest of it. So coming up to here, you're going to get all these as 4s and 5s coming up here. So yeah, coming into group 2 here, and yeah, so 3 and 4 will play out at 14,000 there, which is pretty much just treat that like a minor level. It's just my dog snoring in the background, Minky. So that's where we are really, so it's all good. So look, yeah, the money's flowing in here. We can obviously see that. We can see it, moving into those big tech stocks for better than 5% yields. Yeah, once I say, well, once they've been moving in here for a long time, basically. And what's happening when you get to the third here, the public realize what's going on, so they all pile in, and then people start taking profit, and then the value buyers will come in on wave 4s, and then the wave 5 here will be on lower volume than wave 3. So then there's no one left to get in at that point. That's why it collapses again at that point. So the Russell. So the Russell is doing the same thing as well, but in the bigger picture, it's a bit more bearish. So we've got 1 here and 2 here and 1 here and 2 here finally pushing up. So we'll be looking for 3, 4 at the 18 here. So 1 is the strongest number, then 5, then 8, then 3. So this is a serious number. I always call it a profit-taking number. So we will see it play out and give you grief here. As long as you know that there's a dark cloud coming, then you can get the umbrella out or whatever. But the thing here, as I've always mentioned, is that it's very difficult to look at all of this as a bullish pattern off the low here, because this moves up here in 3 waves, and then it comes down and takes this out here and confirms that it is 3 waves to this point. So this is why we're kind of thinking that there is a bear in the air, and we'll be looking for, in this case here, from B to C here in 5 waves of 1 and 2 and 3 and 4 and 5 here, and then we come down at that point. Now we could be bullish after that, but I'd have to reconcile this in some sort of weird way with, it hasn't actually made a low back down here. That would have been interesting. So we could have it as wave 1 here, an A and a B and a C wave here, but I don't get a very good C wave out of here. A wave 4 can overlap wave 1 in a triangle pattern, but this is a bit severe here. Anyway, it's kind of like you're bending the envelope a little bit, and I enjoy doing that, but you've got to kind of remember where you are within the thing. So the Russell is a bearish picture, it's like the banks in a way. Can they pull themselves out of it? Possibly. Could I look at this as a truncated 5th wave coming down here as some sort of 3, 4, and 5 down here? Put this wave 4 over here and do that, and have wave 5 here and finish. I don't know. Anyway, I'm just saying it's got more of a bearish connotation than anything else. So once we get up here and we've got past those 5 waves, then we can, then we can sort of talk turkey on the next holiday journey. So that's the Russell. So all good there. You can just look, it's going to get tough here. That's all at number 8. It's not the best trade. I know the contract's a bit cheaper and stuff like that on the futures, but yeah. The DJ. Okay, so we've got this bit weird here, but we've got this as 1 and 2 here. 1, 2, 1, 2, 3, 4, 5 for 3rd, 4th, and 5th here, and then we'll yeah, we'll have been, we changed this from 1, 2, 3, 4, 5 for the A wave, the B wave, and the C wave coming down here. Changed that a few days ago. We started talking about that because this was starting to get too big for a wave 2 on this basis. So yeah, we could also put wave B here as well for that. That fixed there as 1, 2, 3, and A, B, C for 4 and down for 5. Not that it really matters. We still ended up down here. And now we're making a move up here. So this will be wave 1 here, and this is little 1 and 2 and 3 and 4 and 5 coming in here. Then there'll be an ABC, and then there'll be this one here. Wave 3 normally comes in at the previous high, so we may get to 35,000 here. You know, things could catch up and speed up a little bit, but that's where we are at that point. Alrighty, well, that's that. It's not a lot I can add to this, and I don't really need to. The range will be in the leading indices and stocks, and we've got a fair way to go. So it's, you know, it's the time to cash in, and we're doing just that with the stocks. You know, I think we've talked about being here long on the 100 ticks and all that, down through here and here. But yeah, just keep building in, and it should be good. Alrighty, thanks for tuning in. Cheers.